Hi, everyone. We're here at the Metals Investor Forum doing interviews for the exploration companies and producers. We've got Andrew Pollard, who is CEO of Blackrock Silver. Andrew, let's jump right into it.
Yeah, great to be here. It's that wonderful time of year. Tax law season finally over, and everyone's looking onwards and upwards to what's going to
Exactly.
be a
We can
pretty
get
good.
to real business now.
There you go.
You bet. So, Andrew, you've just reported some more really strong drill results from Tonopa West. Tell us a little bit about that and where that's taking us.
Yeah, well, last year, just between August and I guess the end of the year, we drilled about 20,000 meters, and it's focused on two different goals we're trying to achieve. One is, we put out our first PEA on the project, which outlined an 8-year mine life, and within that, a 2.3-year payback period. So we want to tackle both those things. One, we think we can materially grow the mine life on the back end. But two, we're using that same mine plan to drill out the first 2 to 3 years of production. And I think so far we've put out 3 tranches of drill holes from just the M&I component of that. Now, this is very shallow drilling that's going to be the early years of production. And what we're doing is we're taking our inferred resource and tightening up the drill spacing on 25-meter centers. Now, the thing to keep in mind is that it's looking like this is the highest grade structure in the silver industry right now. Like, for example, in that PEA, the first couple of years, you're in a stope that's 980 grams per ton silver equivalent.
Wow.
And what we're doing is by infilling that, not only are we, drilling into the structure, but a nice sort of result from what we've been doing is we've tacked a whole new system up dip from where this mine plan starts off. So we've actually brought mineralization closer up to the surface by about 60 meters. So it's gone from 200 meters below surface to now we hit one of our highest grade intercepts ever, like 150 down hole. So, what that means is we're adding new high grade tons early on in the mine life, and what that's going to have a huge positive consequence for both our MPV, and it should help, as that grade ratchets up, we're going to be getting finally an M&I credit, which is going to compress that payback period as well. So it's looking really good. I mean, we've hit some of our highest grade intercepts ever so far. It's tying together better, as well as expected, and we got a lot more assays in the lab, including the first of our expansion holes too. So
Super. Wow. So, these results are important. You mentioned M&I conversion, expanding the high grade continuity. There's this shallowness. Maybe you can elaborate a little bit more in terms of the potential in terms of converting the M&I.
yeah, well, we got a goal of really it's straightforward. We've got a 1,500 ton per day mill. So what we're trying to do is we're trying to drill out 1.5 tons of M&I material, which easy back of the napkin. That's 3 years right there, and it's looking good. I mean, we're tracking these high grade shoots with great regularity now, and as I said, it's tying together really well. I mean, this is a district that we're picking up from the last producing mine in this district that produced about 400 million silver equivalent ounces in the span of 30 years. And it was well known for its continuity, so it was never really an issue for us. The reason we're doing our M&I drilling now is we wanted to show the market that first, get the prize big enough that the juice is going to be worth the squeeze, and then once you realize that, hell, this is going to be a mine, go about de-risking it. So we're de-risking it now, and just by de-risking it doesn't sound like a very sexy endeavor, but this is probably going to have more of an impact on our MPV than finding another 10 or 20 million ounces, because we're just seeing our grade materially go up, and we're hitting all this new near surface mineralization. So a lot more drill results to come, but so far so good, as they say. It's all a guessing game until the resource comes out, and I think we're going to be in a situation to have a new resource out by hopefully September of this year.
Wow, that'd be great.
Yeah.
How far along are we in this drill campaign?
So at the M&I portion of the drilling, I think we've got a few more holes which we've added, where we're actually chasing a new tonnage, about 200 meters worth of strike that we're trying to add on very near surface as well. That looks like it could be quite high grade. So we're added some holes to that program, but we've released 32 of 40 holes so far. We're adding 6 more. Those holes will get pumped out very quickly. So by the end of January, all of the M&I drilling will be done. And then we've got the next focus of last year's program, which will continue into this year until we're done, is we've got another kilometer strike that we're drilling out. And this is stuff that bolts right onto that existing mine plan. So that's how we go from say 8 years as currently laid out to 9, 10, 11. We think we think there's a good chance there could be another 30 to 50% there if we're correct in our targeting. So that's what
Fantastic.
we're so people liked our PEA, which is
Right.
already a standard in the industry. Give us about 1 year with it, and it's
Right.
going to be absolutely blowout numbers.
Well, on that note, this drilling follows on the September PEA. Maybe you can just give us some of the highlights of that PEA.
Yeah, well, just on average, we're looking at an 8-year mine life that's going to be producing 8.6 million ounces at under $12. So this has the potential to be the lowest cost silver mine in the world, and that's a function of the grade. At 570 head grade, which is what it'll average through its life of mine, that's 55% higher head grade than the next closest developer comp in the industry, and that's just based off our inferred drilling. I mean, as we tighten up that drill spacing, and certainly, I think our first M&I resource is going to be like eye-watering numbers in terms of grade profile, given the structure we're into. Grade gives us a lot of wiggle room for this to be a very, very straightforward operation. And something that makes us unique is, a lot of silver companies aren't really silver companies. They could be lead or zinc, or just have a very small credit. With us, our pesky byproduct is gold. And if you were to just use our gold byproduct as a credit, at our base case numbers, which are done at $23 silver and $1,900 gold, if you just use the gold byproduct as a credit, we'd be producing silver at negative 22 cents for every ounce. So you're getting a free ride. But typically, when silver goes, it's because gold's already gone. So we're looking at a very, very robust high margin operation.
Super, quite unique. And so tell us, with all of that said and all of that in mind, what are the things that investors should or could look for over the next couple of quarters in terms of catalysts?
Since we put the PEA out, we've been one of the better performers in the industry, and that's because for so long the market just didn't quite wrap their head around what we had here, because really there haven't been that many new discoveries in the industry of scale, but also it's just a little bit more complicated because it looks like we've got multiple different areas, and I think people thought we had multiple mines we were trying to build. So when we decided to put the PEA out and wrap everything up and show them exactly what it's going to cost to build a mill, exactly what it's going to cost to go underground, exactly how you go from here to here and mine it all as one big underground system, not multiple independent standalones. The economics surprised a lot of people, and we've been just on a nice upward trend, nice orderly. Our volumes picking up. The prominence of the company is really picking up steam. Analysts sort of have to start covering us now because there are only 4 or 5 other actual developers with economics out there. And what makes us unique is our ability to drive this forward. Nevada is a good place to be anyway, but we're on private land in Nevada, which means that we're already making plans and getting environmental studies going, and our baseline air quality, water, rock characterization, so that we hope to be going underground towards the end of next year. I mean, we only made this discovery in July of 2020, and it's very, very realistic that this will be fully, if it keeps going the way that we're driving it forward, in production by the end of the decade easily.
So there's a lot of, from what I saw from your presentation just a little while ago, there's a lot of blue sky in terms of where you can keep finding more ounces, and it's just
it's a paint by numbers approach to mine expansion, because we've got just clear gaps which we're infilling, and we're tying together all these 3 areas as one big cohesive corridor, and it starts very shallow and it's getting shallower, and the shallowest part seems to be amongst the highest grade stuff, which really just helps make it an absolute no-brainer. And it's been a wild couple of years since 4 years from going from exploration targets to proof of concept to first resource, second resource. Now we're looking at operations and optimization and permitting. This is going as quick as I think. Lightning speeds.
Yeah,
I mean,
as quick as anyone could probably hope for.
Oh yeah,
absolutely.
Yeah,
that's great.
If those economics hold anywhere close to how they look like they're going to, I mean, this is going to be cash cow. It'll be, one of the largest silver producers in America when all is said and done. It's going to be straightforward, and I think we're nearly there. I think that you give me 1 more year with what we're doing, our NAV is going to be absolutely blowout. So,
super. Well, exciting times. Thanks for that overview, and we certainly look forward to following the Blackrock story.
There you go. You hold me to that this time next year, okay?
We'll do it.
Awesome. Thank you very much.
Thanks, Andrew.